Welcome to the Tradex Foods 3-Minute Market Insight. This week's episode will focus on the automation revolution in China, in which views expressed are those of my own. For years, North American seafood companies have been turning to China for secondary processing of value-added products. The primary benefit of working with China has been low-cost labor. Production costs in China were consistently 25% of the equivalent production in North America. Also, China processing plants are able to produce very high volumes of fish as they employ, in some cases, thousands of workers. A trend has been developing in recent years that has had a very serious consequence to Chinese seafood processors. Increasing numbers of migrant workers are not returning to their jobs after returning home during the Chinese New Year holiday. Fish filleters are considered skilled labor and are aggressively recruited in regional recruiting efforts. Filleters are opting to work for the company that will pay the highest wage and provide the best benefit. Unskilled laborers are also leaving the seafood industry and favoring furniture and textile manufacturing plants, as they are not cold and wet as seafood plants are. Further, recruiters in these other business sectors are offering higher wages and better benefits, luring labor away from the fish industry. The end result, of course, is higher production costs purely based on increased labor fees. Chinese companies are having to train filleters and plant workers every year after Chinese New Year's, which slows production and ultimately costs money. Production rates in the past 2 years have gone up 20 to 30%. Seafood is big business in China, with 2013 revenue is expected to be $59.1 billion, up 15.2% over 2012. In order to remain at the forefront of secondary manufacturing and maintain market share, companies are starting to automate their production lines. Companies are replacing labor with machinery in an attempt to control costs and to maintain or increase production capacity. Barry Eichengreen, professor of economic and political science at the University of California, Berkeley, and a former senior policy advisor at the International Monetary Fund, says Chinese industrialization is unprecedented. Increased cost automation are likely to become the new norm for China as their emerging middle class demands better working conditions, better benefits, and more money. Without automation, Chinese processors are at risk to lose ground in the world market as companies move to other developing nations for secondary manufacturing. Removing economic factors from the equation, this recent trend to automation will provide world consumers with consistent quality standards and continuous supply of products to market. It may be utopian thinking, but maybe automation will result in lower cost of goods. That being said, the plant must also show a return on investment. Therefore, they will more than likely have to raise production prices to customers. If you have any suggestions on topics you'd like to hear on the upcoming 3-Minute Market Insights, go to our web and let us know through our web chat feature. Thank you for joining me. This is Robert Reierson. Buy smart and eat more seafood.